Let us calculate credit sales out of the given information. The information here is that debtors on 1st April 2005, that is the balance in the beginning of the year is 50,000. Debtors on 31st March 2006, that is balance at the end of the year is 70,000. Cash received from debtors during the year is given to be 60,000. Discount allowed is 1,000 and bad debts are 3,000. So let us post these entries into total debtors account and calculate credit sales. Balance in the beginning of the year would be recorded as to balance brought down 50,000. That is the opening balance. Since debtors are the assets, it would be recorded on the debit side. Then closing balance here is by balance carried down and the amount is 70,000. Now students, the next information given to us is cash received, that is 60,000. Whenever we receive cash from debtors, entry is cash to debtors. Debtors are credited, so entry would be made on the credit side, that is by cash account. Amount received is 60,000. Then discount allowed. So entry in this case is usually discount allowed to debtors. Again, posting would be made on the credit side as debtors are credited. So it would be by discount allowed and the amount here is 1,000. Lastly, we have bad debts. Bad debts reduce the amount of debtors. Entries in this case would be bad debts to debtors. So on the credit side, by bad debts 3,000. Let us find the balancing figure. Totaling this out, the total on this side comes to 1,34,000. Subtract 50,000, we will have to credit sales, which would be the balancing figure. And by balancing figure we mean that this amount has been calculated by deducting the two columns. So 134 minus 50 comes to 84,000. So we can clearly see that by posting these accounts, we are able to calculate the amount for credit sales.